Over the last few weeks, big time AI companies have been reporting earnings. And I think one of the big takeaways so far is that you can easily see that the AI trade is changing. It's about where the money is now flowing. It's no longer just about chips, it's about power, memory, connection, the grid, building data centers. It has evolved immensely, and we're seeing the winners of AI really being part of the infrastructure and build out. So today we're going to be taking a look at 5 AI companies. I'm going to take you through what they just reported, how fast they're growing, give you my thoughts on their valuation, and at the very end, I'm going to rack and stack all 5 companies from number 5 to number 1. We're going to be talking about not only just the growth, but the valuation of each of their stocks, because all of these are really strong companies, but their stocks are priced differently, and we're going to be diving into that today. The first company I want to talk about is Amazon. And Amazon is really important because they are on the purchasing side of a lot of the technology that we're going to be talking about today. The return on AI continues to be the main question that needs to be answered. It's no longer, am I participating in AI? It's, am I getting a good return on my money for investing in the AI? Amazon is already giving us really good evidence that they are getting a return on AI. Total revenue was over 200 billion, with total company growth up 20% in the quarter. And the most important number in the whole report is AWS revenue of 42.2 billion, up 37% versus year ago. And what's crazy is this is the highest growth number that they'd had in the last 18 quarters. They make tons of money on AWS, and this really drives the margins for Amazon. Amazon stock has mostly been in the penalty box because of all the spending that they've been doing within AWS. But after this report, it's really clear and amazing to see acceleration there, showing that they are getting payoff from these. And the stock has, needless to say, gone up really nicely since earnings. So, from a valuation perspective, Amazon is pretty cheap. They're trading right around a 22 on their current PE. Their forward PE is closer to a 29, so expecting a little bit of a slowdown in growth. But when you see AWS growing at 40%, Amazon's valuation looks pretty reasonable for where they are in ranking in terms of the importance of AI and how important AWS is to everyone else. So after earnings, I'm feeling really good about Amazon, and they still continue to be trading at a pretty reasonable valuation. Before we get into the next stock, if you're enjoying the video so far, please like and subscribe to the channel. I really enjoy diving into AI stocks, and if you want to become a better long-term investor, this is the channel for you. The next AI related stock that I want to talk about is Constellation Energy. So they are attacking a different part of the AI bottlenecks. And we've done a lot of videos on AI bottlenecks on this channel. So be sure to check those out if you're curious. But one of the ones I'm most passionate about is the need for energy, because data centers take tremendous amounts of energy. And we're seeing states banning data centers across the board because of the concerns of the strain on the grid. So the companies that are going to be providing power are going to be long-term winners as AI continues to be built out. Revenue for Constellation came in at 7.5 billion, and this was up 23% versus year ago. EPS growth was up 34%, and they also raised their full year EPS guidance, which we always love it when companies are beating and raising their future guidance. They locked in 920 megawatts of energy contracts during the period, and the contract lengths are 15 to 20 years. And this last point here is super critical. AI data centers don't want to lock into contracts for just the next 6 months. They're looking for decades of reliable power, and nuclear is the way you do massive scale with 24/7 reliability. And this is why Constellation is positioned really well for the future. Constellation trades around a 26 current PE and a forward PE right around 22, 23. So again, from a reasonable valuation perspective, they're looking cheaper into the future because, again, we talked about 34% EPS growth is kind of baked into the forecast. So, from a valuation perspective, CEG is going to be one of the lower on the list. But again, this is why they're a utility and generally considered to be lower. But with the hyper growth coming that is on the way for nuclear, this is why they're a pretty big opportunity for investors to jump into. So, my take on Constellation Energy is they had really great earnings. They continued to trade at a very reasonable valuation. And when you combine that the stock is actually down because that stock has been on a big run over the past few years, you know that you're getting in at a decent entry point as we speak right now. Constellation is easily one of my favorite on the list. Next, we're going to be moving back inside the data center and talking about a stock, Arista Networks. And networking is really important because as we continue to have more and more GPUs getting manufactured, the scale of these facilities keeps getting larger. The connectivity pieces for GPUs to be able to talk to each other need to be high speed, and Arista Networks really has an amazing business built around this. For the current quarter, Arista Networks made 3.04 billion in revenue. It was up 38% versus year ago. Their EPS growth was up almost 40%, while their margins were almost at 50%. So, pretty ridiculous numbers there. But this is the first stock where we're going to start getting into the valuation debate. Their current PE is floating right around a 60, while their forward PE is floating right around a 42. And again, keeping in mind the revenue growth and EPS was projected to be growing around 40%. So, in terms of valuation and growth, it's somewhat reasonable, but we are definitely getting pricey with Arista Networks. So if you are going to invest in Arista Networks, you have to really ask yourself, is the moat that they've created and the quality of their business, which I would argue is probably one of the highest quality businesses that's in this entire video, is really worth that premium. But on an earnings perspective, they had amazing earnings. It's just if you're buying Arista Networks, know that you are paying a premium and it's not exactly a deal like some of these other stocks we've talked about so far. Now, next, we're going to be getting into one of my favorite infrastructure stocks, and that is Vertiv. Vertiv is one of the leaders in cooling and heat management. And when you think about all the electricity and all of the heat that's going on in data centers, cooling is really important. And as we continue to build out data centers, you need more components from Vertiv. Vertiv reported earnings of 3.27 billion. Revenue was up 24% versus year ago, and EPS growth was right around 60% in the quarter. They also forecasted future growth between 58 and 61%. So that's pretty ridiculous to think about an infrastructure company that is planning to grow 60%. And hence the age we live in right now, where data centers rule and infrastructure plays are some of the biggest winners in the stock market. But unfortunately, the secret is out when it comes to Vertiv. They are currently trading at a 61x price to earnings ratio with a forward of a right around 34. So with that 60% really strong growth in the future, we're going to see that multiple really collapse over time. But again, you were buying Vertiv, a company that is growing extremely well, but it's also priced in a lot of that growth, as you can kind of see now. So my overall take for Vertiv is they had amazing earnings. I love the future growth of around 60%, but I don't love the valuation. I'd still believe that they are trading at an expensive valuation. So again, this may be one that you may be better off just keeping on the watch list for now. The next company to talk about is TSMC, or Taiwan Semiconductor Manufacturing. They are one of the most important companies in the whole world, and specifically because of their importance to some of the biggest growth companies in the whole world. When you think about NVIDIA, AMD, or Apple, they rely on TSM for all of their chips. And so when you think about the share of chips that TSM makes that supports the rest of the AI revolution, it is one of the most critical earnings reports that you can ever listen to. And they generally have a cascading effect that can impact other stocks around them. For the latest quarter, TSM did $40.2 billion on growth of 34% on top of margins in the high 60s. And what's more interesting is we just got an update on July with their revenue growth of 45%. So they raised their full year outlook to growth of 40%. So they're expecting things to pick up from here. From a valuation perspective, TSM is trading at a 30 PE and a forward PE of just 21 because, again, they're projecting out 40% plus revenue growth. So, from how important TSM is to the world, on top of the growth that they're getting, their valuation looks really compelling at this point. So, my take coming out of earnings for TSM is extremely positive, and their current valuation makes them a very compelling buy at current levels. And one caveat I do want to make sure that you are aware of is with the majority of Taiwan's manufacturing happening in Taiwan, there is geopolitical risk with their relationships with China. This has always made the stock trade slightly discounted versus what would be probably more fair for their business. And as an investor, that's really important to know. But it doesn't change the fact that their business is amazing and they're continuing to make strides to move production away from Taiwan into other areas around the world. But important to know as a TSM investor. So let's put all of these together so you can see all of these companies side by side comparing revenue, growth, and their current valuation. And the reason you need all of these components is despite all of these companies having amazing businesses that I am a firm believer in, not all of the stocks trade at a valuation that is equally as compelling. So, with all those numbers and everything that I've said, here is my rankings from number 5 to number 1 of the stocks that we've talked to today. So, at number 5, I have Arista Networks. This company has an amazing business, and I really want to own this stock. But on a forward looking basis, they continue to be expensive. So there is risk for growth slowing down that the stock would then pull back because of that. And because I'm less certain on that, and because of the valuation that they trade at, I would recommend them of being on a watch list and a candidate you buy on significant dips. Number 4 is Vertiv, and they play in one of my favorite bottlenecks within AI when it comes to cooling and heat management. Them growing around 60% is amazing for an infrastructure company, and really, I think they have some of the lowest execution risk and almost some of the most guaranteed growth moving forward. But again, from a stock perspective, they trade at a higher valuation, meaning that if we do see any significant slowdowns in data center build out, you're going to see Vertiv pull back from there. So again, this is another watch list candidate and one to buy on significant dips. At number 3 is Amazon, and this is the first company that I feel really comfortable at just going out there and starting to accumulate their stock at current levels. They trade at such a cheap forward PE, and I'm really excited to see that AWS is accelerating in growth and their strategy is starting to pay off. So who knows? This stock has been really kind of trading down to sideways for a long time. This might be when they actually start picking up now and into the future. They're one of my favorites for sure on the list. At number 2, I have TSM, and honestly, I almost see this one as truly interchangeable with the first one. They have an indispensable business to the total world of AI, and one of my favorite things about TSM is since they make the chips, they really don't care who the winner is. Is it AMD? Is it NVIDIA? TSM wins in both of those, and when you look at the valuation that they're trading at, this is one that looks pretty undervalued to me and one I'd be comfortable to start buying now and well into the future. And definitely any significant pullback would be a borderline must buy when it comes to TSM. And then finally, for number 1 is Constellation Energy. I have power as my number 1 AI bottleneck that I believe in most. And nuclear energy is at the start of all of that. You need nuclear for the scale that AI is going to be being at. For Constellation to continue to be growing double digits, maintaining low 20s on a forward and current PE basis, I think they're at a really attractive valuation. And like I mentioned before, this is a stock that's been down a lot. Constellation has been trending up over the past few years, and people have kind of rotated away from them. To me, that's the kind of setup and opportunity that I love to get into. When people are focusing on memory or other parts of AI, you want to be looking and buying at the areas that are going underappreciated. And I think power is definitely one of those. And that's basically why they make it as my number one on this list in a company that I'm very comfortable with starting to buy now and accumulate over time. The overarching message from all of these earnings is that the AI trade is going nowhere. These companies have earnings that are accelerating and demand that is being forecasted well into the future for double digit growth. And in the case of Constellation Energy, locking in that demand for several decades to come. I think this continues to be one of the best places to place your money in as an investor. So if you learned something today, please like the video and subscribe to my channel. I dive into all kinds of things AI, and with my focus as a long term investor, I focus on strategies that will help you learn where to put your money and think more outside of the companies that may not be on your radar. Thanks for watching the video today, and we'll see you next time.